Welcome to Moconomy Originals, original stories of founders, brands, and global business power.
Imagine for a moment, what if your Bitcoin holdings could purchase more than just everyday items like coffee or the latest gadgets? What if that digital currency sitting in your wallet could actually buy you a house or perhaps even an entire commercial building?
El real estate que
Real
estamos
estate
hablando
is
sobre
one
los
of the
activos más
oldest
antiguos
assets
que
related to
está
human
relacionado
beings,
con el ser
and
humano
Bitcoin is one
y
of the most
Bitcoin,
modern
que es
assets.
uno de los activos más modernos, podemos decir.
Welcome to the fascinating and rapidly evolving world of crypto real estate, where digital assets are being transformed into tangible property. Today, we're taking a deep dive into the revolutionary intersection of cryptocurrency and property ownership, examining in detail how Bitcoin is successfully transforming what were once purely digital coins into tangible physical real estate investments. Whether you're an experienced crypto investor looking to diversify your portfolio, or simply someone who's curious about emerging trends in property markets, this is an in depth look at how the landscape and future of real estate transactions is fundamentally evolving and changing before our eyes. The financial world is in constant transformation, but in this decade, digitalization has accelerated that change faster than anyone imagined. Today, money, investments, and assets flow through codes silent, transparent, and borderless. Cryptocurrencies, led by Bitcoin, mark the beginning of a new era. They shook the foundations of the global financial system, sparking both excitement and skepticism. Yet behind that phenomenon emerged something even deeper: tokenization.
La tokenización tiene que ver con la
Tokenization is related to the fractionalization and therefore generating contracts at a digital level, which will depend on the type of contract, the rights we obtain over these tokenized assets.
tenemos sobre estos bienes que están tokenizados. En el caso de
In the
la
case of tokenization
tokenización
of
de
real
los
world
activos
assets, we are talking about an increase of 380% in the last 3 years, which tells us about the level of development, the speed of development of this type of content and products.
desarrollo, la velocidad de
Therefore,
desarrollo
it is something that, at this moment, while we are talking, regulation continues to make proposals and modifications, and the market is expanding because it is growing.
La regulación sigue realizando propuestas y modificaciones y el mercado se expande porque está en crecimiento.
Tokenization brings. So it's the most suitable, most modern ledger technology, ideal for modernizing capital markets.
The idea is simple, the impact enormous. Each token represents a fraction of an asset: a share, a bond, a property, or even a work of art, all recorded on a blockchain, a global tamper-proof ledger.
La tokenización funciona
Tokenization works through blockchain, and what blockchain tries to guarantee is that these operations are secure, fast, immediate, almost 24/7, and that, in this way, the process can also be automated through smart contracts. These smart contracts allow streamlining and energizing processes that are traditionally much more expensive and linked to bureaucracy and intermediation.
y dinamizar estos procesos que tradicionalmente son mucho más costosos y ligados a burocracia e intermediación.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger.
In other words, a token isn't just an asset, it's a digital entry in a new kind of ledger that is rewriting how capital markets keep their books. Investment in tokenized real estates represents one of the most recent advancements in the property industry. Tokenization enables houses and apartments to be divided and sold, and numerous smaller units.
Cuando estamos hablando
When we talk about tokenization as a means for the average investor to access high-value assets, we need to understand that tokenization fundamentally consists of the fractionalization of assets.
de activos,
So what we are going to do is take these high-value assets we are talking about in this case and split them into different parts.
y
We could associate this, although it's not exactly the same thing, with what has been done historically with other types of rights, both political and economic. I'm talking, for example, about company stocks. Tokenization, we need to understand it like that. Fractionalization within the digital world.
de las acciones de las empresas. Entonces, la tokenización tenemos que entenderla como esa fraccionalización dentro del mundo digital.
Small programs act like a bridge between a property and an online trading platform. Hence, tokens create a digital representation of a property, facilitating its digital transfer. Purchasing a property is still associated with significant bureaucracy, lengthy procedures, and subsequent high costs. So, what exactly is crypto real estate? At its core, the term refers to any real estate transaction where cryptocurrency plays a major role, either as a direct form of payment, a converted asset, or collateral for purchasing property.
Cuando estamos hablando de la utilización de las criptomonedas en el...
When we are talking about the use of cryptocurrencies in real estate, we can use them to pay directly. We have bitcoins, and what we do is use those bitcoins so long as the counterparty accepts them to pay for all or part of the transaction. We can also use cryptocurrencies as collateral for the operation itself. For example, with crypto reference loans, in which what we do is assume a debt and use these cryptocurrencies as collateral, which remains in custody as a guarantee. That way, they don't have to be sold, but they do serve as collateral to access that liquidity through which we could make the investment. In this way, they do not have to be sold, but they do serve as a support to be able to access that liquidity through which we could make the investment.
La inversión.
But the concept goes even deeper than that. Crypto real estate includes buying a home directly with Bitcoin or other cryptocurrencies, using stablecoins like USDT or USDC for a more stable purchase, converting crypto into fiat at closing, taking out loans backed by cryptocurrency to purchase real property, tokenized real estate where ownership is fractionalized into digital tokens, blockchain-based property records, and smart contract-driven transactions.
Cuando hablamos de...
When we talk about the different assets with which we can carry out buying and selling transactions, or that we can use in purchase and sale transactions, we can also make use of stablecoins. They are related to and closely associated with cryptocurrencies, but they are not exactly the same. We can also talk about converting cryptocurrencies to fiat currency. When we talk about stablecoins, for example, we have to pay attention to the regulations being implemented in Europe with the MiCA regulation, which divides them into EMT and ART. In the case of EMTs, we can talk about, for example, those issued by Tether, USDT. On the other hand, we could talk about the ones from Circle, which are USDC and EURC. In the case of Circle coins, they are accepted under current regulations in the MiCA regulation. In the case of USDT, not yet, despite being one of the leading stablecoins worldwide. And when we talk about cryptocurrencies that we convert to fiat currency, what we're talking about is taking a cryptocurrency and converting it into a value, in this case, like the euro or the dollar.
valor en este caso, como el euro o el dólar, para poder realizar la operación.
In order to carry out the transaction and agree on the value we are assigning to those assets that might otherwise be more volatile and could change in value. Therefore, fiat in this case would be the euro or dollar currencies, for example. When we talk about stablecoins, we are talking about a volume of $300 billion in 2025.
It's an evolution in how value moves around the world. And for the first time, digital wealth is becoming a direct pathway to physical ownership. To understand how we arrived at this moment, we need to step back and look at the timeline. Bitcoin launched in 2009 as a peer-to-peer digital alternative to money. In its early years, the idea of using Bitcoin to buy real estate was laughable. But Bitcoin grew, first crossing $1, then 100, then 1,000, then tens of thousands. A new wave of wealth was created. Suddenly, early adopters who once bought pizza with Bitcoin now had enough digital value to buy entire homes. And sellers began paying attention. The first public record of a property purchased fully in Bitcoin dates back to 2017. From there, the trend spread to luxury markets: Miami, Los Angeles, New York, Dubai, and London. Developers began marketing properties specifically to crypto buyers. Brokers started specializing in crypto transactions. Escrow companies adapted. Even governments began studying blockchain-based property registries. Buying real estate with Bitcoin isn't science fiction. Some sellers now accept crypto directly, while others work through brokers who convert Bitcoin into local currency. The process is faster, borderless, and sometimes even tax efficient, if you know the rules. Things that sounded impossible in 2010 became normal by 2020, and now, in the 2020s, cryptocurrency is becoming a serious player in global real estate. The crypto boom has created a new class of investors. High net worth individuals want to diversify, and real estate is a safe, tangible asset. From luxury homes in Miami to condos in Dubai, Bitcoin buyers are making their mark. Let's look at a few real world examples to understand how crypto real estate works in practice. Case Study 1. In 2021, a luxury penthouse at Arte by Antonio Soterio in Surfside, Florida, made history. The property sold for $22.5 million, paid entirely in cryptocurrency. The largest publicly known real estate transaction completed using digital assets at the time. A developer's decision to accept cryptocurrency had paid off. The sale came just weeks after the developer announced it would begin accepting cryptocurrency payments through a partnership with blockchain platform SolidBlock. According to Forbes, the deal demonstrated that crypto was no longer just a speculative asset, it had become a viable method for purchasing high end real estate. Case Study 2. In Dubai, one of the earliest large scale experiments with crypto real estate unfolded at Aston Plaza and Residences, located in Dubai Science Park. Marketed as one of the first major developments in the region to accept Bitcoin, the project offered apartments priced directly in cryptocurrency. Buyers were able to commit funds using Bitcoin, capturing global attention. But the story also revealed the risks of innovation. Originally advertised as a $325 million development, the project later stalled and its completion became uncertain. While crypto payments were accepted, it remains unclear whether all buyers ultimately received finished properties. The case highlighted both the promise and the pitfalls of early crypto adoption in real estate. Case Study 3. In 2025, Spain recorded one of its first officially reported property sales completed with Bitcoin. A property in Madrid, valued at approximately 1.5 million of euros, was purchased by an international buyer using Bitcoin. The transaction followed standard real estate procedures, including escrow, legal compliance, and the conversion of crypto into euros for the seller. It marked a significant milestone, showing that cryptocurrency could integrate into traditional real estate systems, even in highly regulated European markets. Case Study 4. In the United States, crypto adoption hasn't been limited to coastal tech hubs. An agent with Sotheby's International Realty in Delaware reported selling a luxury property for $175 million paid in Bitcoin, believed to be one of the state's first major real estate transactions involving cryptocurrency. The sale was widely publicized as a local milestone, signaling that crypto real estate was beginning to reach beyond niche markets and into everyday property transactions.
Considero que Estados Unidos,
I believe that the United States, with the Genius Act, is trying to maintain a preeminent position in the markets at an international level. It is therefore investing heavily in various stablecoins and providing the U.S. financial system, which we know has a global impact, with the tools it needs to evolve in an agile and dynamic way. On one hand, we have agility and dynamism. On the other hand, the fact that everything is happening in real time often limits consumer protection or the most conservative rules that aim to mitigate or reduce risks as much as possible. Therefore, in the United States, we see greater openness. In the European Union, we see more conservative positions. And then, in other parts of EMEA, we can see that they are quite open to carrying out these types of operations. Some are carried out, others are not carried out, but undoubtedly within a framework of a will to advance, to study, and to put into practice the benefits that this type of technology can bring, and also to become aware of the limitations it may have.
Taken together, these cases tell a larger story, one of experimentation, success, setbacks, and growing legitimacy. Crypto real estate is no longer hypothetical. It's happening, transaction by transaction, across the globe. But it's not all smooth sailing. Crypto's value can be volatile, regulations vary by country, and tax implications can be tricky. First, volatility. Bitcoin and other cryptocurrencies can move dramatically, sometimes losing or gaining a third of their value in weeks. For buyers who convert at closing, rapid swings can erase gains or spike costs in hours. Second, transaction mechanics and title. Even when a seller accepts crypto, most governments and land registries require deeds to be issued in the local currency. That usually means an intermediary converts crypto to fiat before the legal title is registered, adding counterparty risk and an extra step that can delay and complicate settlements. Third, taxes. In many jurisdictions, authorities treat crypto as property, not currency, which makes nearly every transfer a taxable event. That includes sales, exchanges, and sometimes even payments for goods or services. Buyers and sellers must track cost basis, gains, and report the transactions accurately or face audits and penalties. Fourth, lending and counterparty risk. Crypto backed lending exploded in the previous market cycle, but it ended with high profile collapses and bankruptcies. When platforms fail, borrowers and depositors can lose access to funds, collateral can be liquidated at a loss, and promised liquidity disappears, a danger for anyone relying on third party services to bridge crypto and property purchases. Fifth, compliance and anti money laundering rules. Regulators and global bodies have tightened rules around virtual assets to prevent illicit flows. Real estate transactions are high on that list, meaning additional KYC, source of fund checks, and reporting requirements. Failure to meet these standards can stall a sale, trigger investigations, or expose participants to legal liability. Sixth, operational and technical risk. Crypto transactions are irreversible. A single wrong character in a wallet address or a phishing attack on an email with wiring instructions can send millions to the wrong place, and there's no bank to reverse the transfer. Seventh, technology risk. Smart contracts, tokenization, and new platforms bring innovation, but also software bugs and design flaws. A poorly written smart contract or an unaudited tokenization platform can freeze assets, misallocate ownership shares, or enable exploits. Finally, market and reputational risk. Developers and brokers who accept crypto can attract new buyers, but they also take on greater scrutiny, regulatory compliance burdens, and the risk that projects promoted with crypto funding may underdeliver, stall, or become entangled in legal disputes. In short, crypto can speed and globalize property deals, but it also layers on volatility, regulatory complexity, and new failure modes. For buyers, sellers, and advisors, the lesson is clear. Proceed with rigorous legal counsel, hardened custody practices, and transparent compliance. The opportunity is real, but so are the pitfalls.
De nuevo, tenemos
Again, we have to take into account that the fact of eliminating intermediation makes the procedures more agile, but at the same time, intermediation often provides guarantees that we will now have to make sure are protected with tokenization.
asegurarnos se protejan con la tokenización.
Still, the opportunities are huge. A new generation of buyers is turning digital value into physical assets. For many, Bitcoin isn't just a currency, it's a gateway to ownership. One of the biggest shifts is tokenization. Instead of buying an entire building, investors can now purchase fractional ownership through blockchain based tokens. This lowers the barrier to entry, allowing smaller investors to access real estate markets that were once reserved for institutions and the ultra wealthy.
Potencialmente, lo que se
The potential goal of tokenization is to democratize access, because initially acquiring a high-value asset is difficult with lower purchasing power. When we fractionalize it into different pieces or parts, the asset's price becomes lower. Ultimately, we are selling parts, which makes them more affordable and accessible to people with less wealth or more limited investment capacity.
va a permitir que el precio del mismo pues sea más bajo, porque al final estamos vendiendo partes, y por tanto sería más asequible, sí que se lo podría plantear una persona con un patrimonio menor, ¿no? O con una capacidad inversora más limitada.
Tokenization also brings liquidity to an industry that has traditionally been slow and illiquid. Real estate transactions can take months. Tokenized shares can potentially be transferred in minutes. Crypto is also reshaping cross border real estate. International buyers often face currency controls, wire delays, and banking restrictions. Cryptocurrency allows capital to move globally with fewer friction points, opening markets to buyers who were previously locked out. As a result, cities that embrace crypto-friendly regulations are attracting global capital faster. Developers are responding by marketing properties directly to crypto holders, not as a novelty, but as a strategy. Governments are also exploring blockchain for land registries and property records. Immutable ledgers can reduce disputes, prevent title fraud, and provide permanent, verifiable ownership history, especially in regions where property rights are difficult to enforce. This isn't a complete replacement of traditional real estate. It's a transformation. Crypto doesn't eliminate the fundamentals. Location, demand, and due diligence still matter. But it changes how value moves, how quickly deals happen, and who gets access. So, what does all of this mean for you as an investor or future homebuyer? It means new opportunities are emerging, opportunities to leverage your crypto holdings, opportunities to participate in international markets more easily, opportunities to acquire property faster and more efficiently.
La tokenización de los
Tokenization of real estate assets provides liquidity because when we talk about real estate, when we talk about a building, when we talk about a house, if we want to get rid of it, we are aware that it is not something immediate. It requires lengthy bureaucratic processes that, in many cases, can become complex. In the case of tokenization, we're talking about a type of sophisticated technology. Therefore, we will need to examine the exact consequences and the level of knowledge required in order to proceed in the best way. But it's true that potentially we will obtain a liquidity greater than with real estate only. It reminds me of, or we could associate it with, other types of assets that already exist, such as REITs or SOCIMIs. These allow us to hold shares, or in this case, property rights or property contracts, which reflects the underlying intention of tokenization. It is an intention that has been dragging on since ancient times, which is to obtain returns from real estate. Therefore, what we need to do is always understand the rules of the game and be able to play them to the best of our ability.
But like any emerging space, education is key. Working with crypto friendly agents, attorneys, and escrow companies is essential. Understanding your local regulations is crucial, and ensuring the security of your crypto wallet is absolutely non negotiable.
La educación financiera tiene que ver con
Financial education is related to this continuous learning process. We're talking about sophisticated assets, systems, and procedures. Therefore, we must constantly educate ourselves. This will generate a financial culture that has to do with people's capabilities and skills to cope with decision making. And in the European case, we can talk about EZMA. We can also talk about compliance with training hours, as well as the experience of the professionals who advise us and accompany us at any time, when we are making decisions and when we are carrying out operations. The importance of financial education, or in this case, the importance of advanced knowledge about any type of financial asset and any associated procedure, is fundamental because, even with it, there are always risks that we cannot completely eliminate from the equation. Therefore, at the very least, let's try to minimize the risks that depend on us, and we must also try to minimize the risks of people and entities, that is, natural or legal persons, with whom we are going to interact when we are performing this procedure to ensure its success. Ultimately, what we want is to have procedures that guarantee that our objectives can be successfully achieved.
existen siempre riesgos que no vamos a poder absolutamente eliminar de la ecuación.
The cryptocurrency market has entered the opening days of 2026 with renewed momentum. After a volatile end to 2025, prices across major digital assets have moved sharply higher, drawing attention from both retail traders and institutional investors. In early January, the total cryptocurrency market capitalization climbed to around $3.2 trillion, according to aggregated data from major market trackers. This represents a meaningful rebound from late 2025 levels, with the market adding hundreds of billions of dollars in value over a relatively short period. While exact figures vary, the direction is clear. Capital has returned to the crypto market at the start of the year. At the center of this move is Bitcoin, which rallied toward the $93,000 level in the first week of January. As the largest and most influential digital asset, Bitcoin continues to act as the market's primary anchor, and its strength has helped lift sentiment across the broader ecosystem. Historically, strong Bitcoin performance has often preceded periods of increased activity in alternative cryptocurrencies, and early 2026 appears to be following a similar pattern. Another key factor has been renewed institutional participation, particularly through spot Bitcoin and Ethereum exchange-traded funds. Reports from early January indicate notable ETF inflows, suggesting that traditional investors are once again increasing exposure to digital assets. The current momentum appears to be driven by a combination of factors, including Bitcoin's price recovery, increased ETF inflows, improved global risk sentiment, expectations of more supportive regulatory and macroeconomic conditions. As 2026 begins, the cryptocurrency market finds itself at a familiar crossroads. Renewed optimism balanced against persistent uncertainty. Whether this early year strength marks the beginning of a sustained trend or simply another chapter in crypto's cyclical nature is a question that only time will answer. For now, the message from the market is clear. Crypto is once again commanding attention. If you approach crypto real estate with knowledge and preparation, the rewards can be extraordinary. Bitcoin to bricks isn't just a catchy phrase. It's the future of real estate investment. If you want to stay ahead of the curve, now's the time to learn how crypto can open doors. Literally.
Para explorar, sin duda, yo creo que
To explore, without a doubt, I think it's a good time because everything related to finance has to do with people's interests, and therefore exploring, acquiring knowledge, and acquiring expertise, even to the extent possible, I think is always advisable.
adquirir una expertise.
Ultimately, what we need to talk about is transparency. We need to talk about understanding what we're doing, and we need to talk about caution and control. But I think exploring is very interesting on a technological level and also very interesting on a social level, what it could mean.
Yo creo que es muy
We could also consider the possibilities that this could offer in light of what we've discussed regarding the democratization of access to new types of investments.
podemos también plantear ofrecer de cara a, como hablamos de esta democratización de acceso a nuevos tipos de inversiones.
From digital coins to physical assets, from online wallets to real world property lines. Cryptocurrency is reshaping how we buy, sell, and think about real estate. We are witnessing the merging of two worlds, the oldest asset on Earth and one of the newest technological inventions of our time. And as the future unfolds, only one question remains. Will Bitcoin buy your next home?